again, and welcome to another edition of CMP TV. I'm Fergal McAlinden, the news editor for CMP magazine. And today we'll be discussing changes to the qualifying rate for mortgages in Canada, what their implications will be for the industry as a whole and for the housing market. I'm very pleased to welcome our guests for today's panel. Samantha Gale, the CEO of the Canadian Mortgage Brokers Association for BC, and Dong Lee, Chief Operating Officer of the DLC Group of Companies. Thanks to you both for joining us today. Samantha, I'd like to start with you. What are your views to the recent changes that have been announced in terms of the qualifying rate?
I think that it's a continuation of the B20 policies that we've seen being implemented in the past. I understand that it's going to impact somebody's buying power by about 5%. So that it definitely will impact buyers. And it's going to, I think, have broader impacts than that, simply because people have to live somewhere. And if they can't afford to buy, then they're going to have to stay in the rental market. So the concern about these policies, these B20 policies, is that they are both it's too narrow in that it doesn't consider housing affordability in a more holistic sense, but it's also not nuanced enough in that it doesn't consider how to target affordability issues in a more nuanced way. For example, such as by targeting speculators. We've seen that in Halifax. The city of Halifax has had out-of-province buyers buy up properties in Halifax, other parts of Nova Scotia as well, for the purpose of flipping. So these kinds of policies don't address specific kinds of buyers. So I think that everybody will adjust and figure it out. And I guess that's good news for mortgage brokers, because that's their job, is to understand these rules and assist the buyers with navigating them. But we'll see how the affordability question is addressed by them, I guess, in the near future.
And Dong, what are your thoughts on the implications of the change for the market as a whole?
It might be surprising to some of the viewers out there that there's been over 70 rule changes since 2008 on housing finance. And brokers and all the participants have found ways to adapt and to grow with it. I think the best analogy I've heard out there was, the country is like a classroom of children with two unruly ones called Toronto and Vancouver. And you've got the government who decides that they want to level a penalty on every student as opposed to those two kids. So you've got these rules that, as Samantha said, are overreaching, that aren't targeted specific enough to those markets that are really causing the problems. And it is going to cause a bit of an impact because there are some markets like Saskatoon where 70% of all home financing are high ratio mortgages. But the problem you run into is that this is a heated market, and it's like throwing in a few ice cubes into boiling water. So you've taken the boiling water down a bit, but the problem is you haven't taken away the heating element that keeps boiling it over, which is the issue of supply. So I think we're starting to see a little bit of a I wouldn't call it a downturn, but a softening of the market a little bit. I think market activities have come down since the rule changes took effect. I think Scotiabank said that on May 31st, they saw over 2,000 applications come in on that one day alone. So you had a surge of activity coming in through the rule change, and now you're going to see a bit of a softening. But those ice cubes at some point are going to melt, and it's going to just start all over again.
Samantha, one of the things that we've heard the most prominent criticisms about the changes is their likely impact on first-time home buyers. What's your view on how significant it will be for them?
I think that I guess there's two ways of looking at it. I think that in the big picture, the most significant impact on home buyers is simply the market condition of the housing market. How we've seen rapid escalation of house prices, and simply getting in, competing. Dong mentioned Vancouver and Toronto. We've all seen lots of competitive bidding in the housing market. That's likely going to be the biggest or the bigger impact on buying. So yes, it's making it harder to qualify. Soon you're going to have an impact, but if you take a look at the big picture, it pales in comparison simply to the cost of housing, which is driven by obviously market forces. Dong made a reference to the problem with supply. Our supply issues continue to be the number one challenge. We still have supply controlled primarily by municipalities. Municipalities have a spotty record in terms of approving building developments. And I know one development in the Okanagan area that is stalled for many, many years due to just some difficult bureaucrats in the municipal government who provide approvals. So it's a complex problem. At the end of the day, the stress test could potentially, I think the rationale the government's given for the stress test is they're trying to protect buyers. It's a consumer protection measure. So they're trying to protect buyers from higher rate increases. I don't know, maybe there's some merit in that. But I think all in all, I think the real culprit is the lack of supply, lack of proper planning at all different levels, municipal, provincial, and federal, to try to get properties, missing middle properties. We tend to focus on downtown areas with very high density and protect these single family communities. There's a lack of affordable, what we call missing middle options, higher density housing like townhouses, which are not high rises. So it's a complex problem. I think that this particular stress test is going to have an impact, but we'll have to wait and see what that is.
And Don, what's your view on whether the new changes are going to price first-time home buyers even further out of the market?
Sadly, I think it's the truth. We are generating a bigger gap between the would-be aspiring middle-class homeowner and those that are already in the marketplace. I think to Samantha's point, it's not the aspiring middle-class home buyer who's driving up prices. It's the speculators, it's the investors that are buying their third, fourth properties. Here's a problem we run into. We've got over 400,000 new immigrants that the government wants to bring in 2021. That is going to set a new record, and that record is being broken from 1913. We have a generation of millennial buyers that have been squeezed out of the market. There is a lobbying group called Generation Squeeze that's been created to lobby the government and regulators to talk about the fact that there is a generation that's being squeezed out of the home ownership market because they just can't afford it. So, I think, as much as we hope that these kind of rules are doing, as Samantha said, which is protecting homeowners or home buyers or their consumers, I think the simple reality is we continue to beat up the would-be first-time home buyer. What I think would have made a lot more sense is applying the new stress test to conventional buyers or to those that are purchasing rental properties, but leaving it alone for high ratio mortgages. Those are the people that are trying to get into the market for the first time. We've got to find a way to help them into the market, not make them compete in rules that really hinder them from getting in.
And then, Samantha, I suppose one of the big questions becomes whether we're likely to see more government intervention down the line this year. What's your thoughts on that?
I think that we're likely to see the rules be tinkered with. I don't think that we'll see any changes for the rest of the year. But certainly after this year, I think that government will be evaluating as the economy moves out of the COVID economy and I think there's speculation that the economy is going to blossom, it's going to grow, it's perhaps going to grow in different ways. I think that that'll trigger some evaluation of the rule, and I think, yeah, absolutely, it's going to be tinkered with, but I think it's going to be reviewed in conjunction with the progression of the economy putting out of COVID. So I think the rule will probably stay as it is for the balance of the year.
And Don, can you foresee any further federal intervention coming down the line?
I think I'm in agreement with Samantha. I don't think that there's going to be any more changes to the rules. I think these rules that came in on May 31st was a reaction by the government to the bank CEOs saying the market was out of control. They're heading into an election period. They don't want to impact future voters who look at real estate as being one of their major asset classes. I do think that once the new government is formed, then there'll be a new renewed focus on this industry and what to do. Listen, there's a lot of rules that have been tinkered over the years that have caused problems. You know, a good one is the $1 million limit to high ratio mortgages. You know, all the insurers' portfolio here in Toronto and Vancouver are made up of entirely condominiums, and that isn't a healthy way for our insurers to be insuring these properties. So, you know, that needs a change. You know, that $1 million cap needs to go to $1.5 million or $2 million to be a little bit more realistic. I think that $1 million cap might have been in place for, I think, 20 years or something. So there's a lot of things that we need to do. I think the government also is fixated on this, you know, this loan to income ratio of 4.5 times. Interestingly enough, in the UK, the regulators there cap the lenders to 15% of their portfolio are those mortgages where there is a loan to income ratio of 4.5 times or greater. And really what the government here in Canada has done is, without really focusing on that, has looked at qualification ratios as a means to get to that same goal. So, you know, I think there's just a lot of challenges that I think we all face. And as Samantha and I both said, you know, we keep kicking this can down the road called supply. And until we fix that, we're going to continue to run into these problems. And I don't see a solution foreseeable in the future unless we discuss and deal with supply issue, which, as Samantha said, affects all levels of government.
Well, Samantha, just in that context, I'm interested to hear what your advice would be to brokers in the current climate with these changes coming into play.
The good news for mortgage brokers is that you know, they're experts at qualifying borrowers, understanding the rules, how they impact borrowers, coming up with solutions. So the good news is that, you know, being able to navigate these changes with the borrowers, the clients, is only going to make the mortgage broker industry more robust, more necessary, and more valued. I think that there's very clearly a role for mortgage brokers in arranging financing long into the near future. You know, mortgage brokers obviously have to keep up with the rules. You know, broker houses like the one Dong represents do an excellent job of explaining to the brokers what they are and how they impact the market. So I think it simply serves to enhance the value of the mortgage broker industry.
And Don, what's your assessment of where things lie for brokers after these changes?
As I said earlier, you know, over 70 rule changes since 2008. I don't know if anybody remembers, but 2007, 2008 was when there was a US housing market collapse. And we all said, you know, B20 and B21 are going to be devastating to our channel. But I think the simple reality is, as Samantha said, is all these rules changes make it really complicated to, you know, home buyers that are in the market maybe once every 5 or 7 years. That means in that 5 years, there's been 35 rule changes that they've got to try to figure out themselves. So isn't that a great place for a mortgage broker to step in and help that home buyer navigate through all the changes that they've sort of missed out on over the last, you know, 3-5 years that they've been out of the housing market? You know, I think the interesting thing is Evan Siddall once went up on stage at the Mortgage Professionals Canada National Conference and said that these rule changes are a gift to mortgage brokers in the mortgage industry. And he's so absolutely true. He said it tongue in cheek, but it's true. all these things create so much complexity that the home buyer has an awfully hard time figuring it all out, unless you are two salaried individuals with down payments saved from own resources, buying a property in an urban location. Then it's cookie cutter. But for everybody else, there are weird rules that you got to figure out. And I think for mortgage agents, all of these rule changes has been a phenomenal opportunity, as Samantha said. And I think all of our associations and brokerages and networks have done a great job sort of filling that gap and being a support to homeowners. Even the pandemic, when all the branches closed down, it was the brokers that stepped in and filled that gap and helped the customers through deferral. So all in all, I think brokers, it's a great opportunity. With every change, look on the bright side as opposed to looking on the negative.
Interesting times ahead over the next few months. We're going to leave it there. I want to thank both Dong and Samantha for joining us today for that discussion. Thanks to you at home, and we'll see you next time on CMP TV.